Philipp Schaper, you are CEO European Real Estate at Patrizia. Thank you for joining us on BiTV.
Very much for having me.
Despite a very challenging investment environment for all the investors in Europe over the last year, Patrizia closed over 3.5 billion euros of real assets transaction in 2023, therefore real estate and infrastructures. What were the main drivers of your strategy over the last year?
Well, thanks, Luke, for the question. I mean, obviously, 2023, I think, has been a tough year for European real estate. We've seen transactional numbers drop by roughly around 50%. So as a result of that, also, unfortunately, us have been transacting far less than what we have seen in the previous years. However, we managed that around 80% of our transactions were actually acquisitions and new investments. So that ensured that we have been able and in a position to organically grow our AUMs also over the last year, which indeed has been challenging. I think, overall, we stayed relatively close to our main convictions in the real estate segment. I would say the main headline probably is around urbanization. To me, the interpretation of urbanization covers both the living, affordable, and sustainable build-to-rent segment, as well as the logistics market across Europe overall. Just to name two examples from those two segments, we have managed to acquire an urban logistics portfolio in Sweden for one of our flagship value-add funds, the Trans-European series, this time for fund vintage number 8. And we also continue to raise significant capital for our sustainable communities impact strategy, which has reached now a firepower of around 500 million. And in addition to that, we managed to reduce by selective sales our portfolio exposure towards the shopping center and the non-prime office segments. Obviously, I think, these kind of like market disbalances that we've seen last year offer attractive opportunities as well, but you have to be very selective in identifying those opportunities. And last but not least, I think, the transaction volume of around 3.5 billion that you have just mentioned, I think that's only one part of our activity. The other one was obviously we've been engaged in a spending program of close to 3 billion when it comes to refurbishments and developments of our existing portfolio. Our asset management team have successfully signed around 600,000 of commercial leases. And last but not least, we've also successfully and actively been engaged in around 3 billion of debt refinancings over the last year.
You mentioned in opening the lower level of activities over the last year on the commercial real estate market in Europe. As we expect a stabilization of the rates environment in 2024, some even suggest, that some cuts in interest rates could be coming from the ECB over the coming year. How do you see Europe's real estate investment market fare in 2024? Can we expect maybe a little bit more activity and opportunities for investors to capitalize on?
Well, hopefully, that's the initial reaction. I think obviously the interest rate environment has a major influence on pricing as well as liquidity. If interest rates remain high, I think we can expect that it continues to fuel insecurity around asset pricing and also asset allocation, namely real estate versus other asset classes. On top of that, Obviously, the insecurity around the interest rate environment, I would say, are tightening the general credit availability, and loan terms remain obviously less favorable than in the past. So overall, I would say, if this trend of unstabilized interest rates and environment is continuing, it will unfortunately continue to support kind of like the mismatch in the buyer and seller expectations when it comes to asset pricing. And I would clearly say that the stabilization of rates is amongst one of the most important changes we need to see before transactional markets across Europe are returning back to normal.
In Europe, Patrizia's most active markets for transactions over the last year were Germany, Iberia, and the UK. Obviously, Businessimo is a Paris-based media, so I have to ask, what is your appraisal of the European core markets for 2024? But also, how do you see France figuring in your strategy going forward?
Sure. I mean, while you are based in France, Patrizia's original headquarter, yeah, and origin is obviously Germany. So I mean, looking at our transactional activity, Germany has, of course, historically always played a very strong part. However, over the last couple of years, we have seen a clear trend that the vast majorities of our transactions are done actually outside of Germany, not only across Europe, but also on a global scale. You have also made reference to the allocation of where we have invested a lot over the last year. Two of the top regions that can be named is the UK and also Iberia. Those two regions also represent the two regions with the lowest drop in terms of investment activity over the last year, obviously for many reasons, and is also kind of like mirrored in our activity. Overall, I would say we will continue to expect an uncertain and unfavorable market environment also at the beginning of 2024. Hopefully that will stabilize and recover over the course of the year. When we look at the pricing, for example, I think it's kind of like market expectation that we have been through the worst when it comes to the repricing, especially in the core segment, and that the repricing will hopefully slow significantly over the course of 2024. And in principle, I would say in terms of our investment convictions, we don't plan to move away from those significantly over the course of the year. So I would say the three main buckets of our activity will remain the living space. It will be the logistics space, obviously also fueled by the expectation from our investors to achieve more returns in the value add segment. And when it comes to the geographical spread, I think we remain fully convinced to pretty much look all over Europe. Yeah, and obviously in addition to the UK, Iberia, France, Germany, I think regions where we also take a close look and I think that are offering interesting investment opportunities remain the Benelux regions and also the Nordics. Yeah, while mentioning France, yeah, I think obviously it always has been and remains on the very top of our investment map. But it's also not a super easy market, I would say, for a lot of the foreigners. Prices tend to be relatively low on a pan-European scale. And then on the other hand, Paris was, I think, after London and Berlin, this third largest destination for cross-border capital in 2023. I think in the office segment, it was even on the second place, just after London. So yeah, I mean, France remains one of our top destinations, but especially in the living segment, residential, it's a tough market. It's a tough market that usually and historically was very much dominated by national investors and national capital.
Well, you are not the first one to tell us that on BiTV, so obviously I understand completely. Thank you very much, Philipp Schaper, for your time, for this valuable insight, and also thank you all for being with us, and we'll see you soon on BiTV.
Thank you very much.